was live, dropping levels with the Rip Crew vibe. Your guru's gone, he sold too soon. We nailed that flag on the 5-minute Zoom. Chart got called it, Fitwit's late. We post our trades, no need to fake. Stocktwits knows and your Discord slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows and your chat's a ghost. Try to flex, but we cook the most. Bears try foul while the bulls just coast. Stocktwits wins, let's raise a toast. Whoa. We shorted the hype, you read a blog, we read the tape right. Volume surge, we saw it first. Posted that setup before it burst. We ride the rip, we fade the fake. We mean the market till the close bell shakes. Tag your tickers, shoot your shot. This ain't a cult, it's just too hot. Stocktwits knows and your Discord slow. We were live while your alerts said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows and the algos froze. We're the edge while your strategy blows. Your DMs try, our alerts explode. Stocktwits wins, just thought you'd know. Stocktwits knows and your Discord slow. We were live while your alerts said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows this ain't for show. We move fast while the boomers grow. Forget your forums, forget your posts. Stocktwits wins, coast to coast. Oh, oh, oh. Yeah! Stocktwits knows. You just caught the top.
Woo! That always fires me up, GP. Hey, Nick. What's up, guys? Hey, you're watching the Community Rip. It's Wednesday, 2 p.m., so you know it's your favorite jabronis here. We're waiting on Fed Powell, Jay Powell, to give us what's going to happen with rates. I don't think anything's going to happen, but as soon as we know that, we'll let you know. Fellas, what's up?
Another day, another dollar.
GP, back home. Great to see you with the rack behind you. You've been getting your workout in this morning. What's going on?
No, I'm just jet lagging, man. I need some sleep. But yeah, so they leave them unchanged, which is
there you go.
Fantastic.
Expected.
The Fed is so ahead of the game.
Expected.
They're so ahead of the game. So ahead. That's probably the least volatile candle I've seen off of FOMC in a really long time. What was that 50 points on the NQs? We're stuck in the Sunday night gap, literally for the last 3 days, and just kind of stuck in that zone.
That's it. That's the show.
That's it.
All right.
Literally,
yeah, that's it.
Well, what else is there to say? We grind higher. Everyone's calling for a top. People buy puts. VIX spikes. Rinse and repeat. So many names go sideways. Handful of names break out. NVIDIA is going crazy. AMD is going crazy. Chips are leading. This is all healthy, but kind of needs a reset type action. And yeah, the only one who gets constantly reset is Tesla, as we know. But other than that, and Apple too. Apple sucks,
Yeah.
But Apple earnings are coming up. Maybe it's Liberation Day for Apple, but most likely it'll just trade flat and do nothing yet again.
You brought up the VIX. This is a chart we haven't looked on since we talked to Cookie back on our YouTube show. I mean, it's pretty doggone low.
Yeah.
Do you think this is Nick? Do you think this is a pop territory at all?
I mean, I think you should. It's tough to say. Like, I've been kind of hearing stuff from both ends. Buddy is saying that this is it. This is it. Others, not so much. Like, just from what I've seen and kind of the way that I have kind of approached the week has just been to lighten up. I have churned a couple positions, and my P&L is kind of, honestly, it's kind of churning. It's pretty much flat for the week, so it's not like, I don't know. Speaking of which, I'm gonna be on vacation next week, so I won't be here. But I was having mouse difficulties, so I couldn't I couldn't talk to you guys before the show. But anyways, I mean, I think it was just kind of fortunate timing for me. But I'm certainly not selling out of anything entirely. I'm just lightening the load a little bit.
What are you lightening in? Are you lightening in? You're not lightening in anything of high conviction, obviously, or are you?
No. I mean, Tesla's the one that's kind of been a dinger in my concentrated account.
Here we go.
You want to talk about Tesla? Is that what?
Well, no, I mean, we're going to have to talk about Tesla, but please continue. Tesla's been a dinger. What else?
No. Yeah, nothing really. I mean, other than that, I've kind of like CPNG like CPNG, for instance, started to roll. I reduced that. I'm not going to head into the weekend with anything that's red. So like I threw Marvell on this morning. I'd love to see ARM kind of work out this week, but if that doesn't work, I'll probably take that off the books.
And they're reporting after hours, right?
Yeah. I think the focus. Yeah, I think the focus is kind of the alt energy names. Like that's where the massive moves and the runs I think are happening. And I'm not really seeing many people on Stocktwits really talk about them, from nuclear to all. I mean, just all of them.
So
from Jev, Sedge. Oh, go ahead.
Sorry, Nick. When you tagged XLE, that wasn't just you being facetious. Like you're actually really bullish.
I was pulling up a bunch of the XLE names, and I thought, like, dude, I think they look freaking. I mean, in a range, so it's not like
some report Friday.
Yeah, well, I think is that XOM and CVX, or I couldn't remember what the other one was.
That's right.
But I mean, just look at the weekly of XLE. Like, I don't understand how. Sure, you could argue that it's dead money because it's just moving sideways, but like, fuck, man, that's a pretty base. I don't know. I'm not in any of the traditional XLE names. I like the more alt energy names like GE, Sedge, Jev, and the nuclear stuff. But
GP, is he talking to you?
I don't. Probably not.
Sorry, I didn't hear it properly there.
Yeah, sorry, we're talking over each other a little bit. I said, did Nick talk you into any energy? He's talking about the XLE.
Can you bring up Oxy?
No, that's like the shittiest looking one of them.
Can you now zoom back 30 years?
How far would you like me to zoom, GP?
30 years, please.
30 years. Let's just go to the monthly candles then.
Sure. What does that look like to you?
I mean, it's not rolling hard.
All right, let's do another one. BP.
Yeah.
Let's BP.
I was going to say stack.
All right, hold on. Let's do another one.
I mean, like sure. What's the other one? SLB?
I got no interest in the sector. It is literally tied to a commodity that is governed by people who will make decisions that don't fall into my technical world. So quite often technicals don't work here, right? It breaks and stuff like that. So for a technical trader, this is a miserable chop trade quite often. If at some point XLE, this is the gold trade, Nick. If at some point XLE breaks 101.52, I will look to go long on the retest of 101.52. Similar to gold, once it broke, gold has gone straight up.
Sure.
Right?
No, I'm not. I totally agree with you. Totally agree.
So if you're buying, fine, sure. To me, on the weekly, it looks like a bear flag right back into 90 on XLE. Yeah, I don't. You're going to need a war. you're gonna need, for oil to go back through. Monthly MACD is still crossing down. Quarterly is about to cross down. It looks like a rounding top at the right shoulder. And until it gets through and closes above that 94, 71, 95 area, technically it's still a distribution pattern to me. And like, that's fine. I don't trade this at all. I tried a couple of puts over the last couple of years, and it's literally just been sideways.
GP and I get spanked in the energy sector for whatever reason. Whenever we try to do it, usually doesn't work out. So we stay away for the most part. That's the way it's worked out over the past few years. Nick always likes to get you some gush, but other than that,
I think you throw your alerts on. I'm not disagreeing that it's dead money. I don't think it's distribution, though. I think that it's just setting up for another leg higher. When that happens, maybe never. Maybe it doesn't happen. I'm just saying I think the chart looks good, and I think you should have your alerts at the very least set for a breakout.
One more point. One of the heaviest names in the sector is XOM.
Yep.
ExxonMobil. Can you do the quarterly here?
I would love to do that for you.
Shit. Okay.
Oh shit, he said. That looks kind
Nick,
of
if you were objectively looking at XOM right here, right?
Yeah, fair. I guess I would see. Yeah, I see those three big red volume bars.
Like from 08.
Yeah.
Right. What have we been doing? You can potentially say that we're building a base over here, but to the naked eye, that looks like, to me, it's like a rounding formation, right? So it's like, boom,
sure,
and then come back. And if it holds the 84 retest, right? This is what I'm thinking. If it holds a retest, then you can have a bigger move higher. But this requires oil to go nuts, right? And if oil goes nuts, the rest of the market will die, right? So
sure, I've heard that.
Like, how does oil organically go up and not have inflation come back roaring, not be a war in the Middle East? Has oil just naturally ever progressively moved up?
Well, in Nick's defense, he wasn't just saying oil in general. I mean, I picked on him for tagging XLE, but I think there's some nuclear plays that you're looking at as well, right, Nick? Just to be fair.
Yeah, I mean, if all of the nuclear plays look phenomenal.
If you're not talking about XLE, then fine. XLE is heavily weighted in two names. They own like 50% of the market cap. I mean, the market cap in XLE, it's ExxonMobil and Chevron. And so if you're talking about alternate energy, especially nuclear with all the AI going on, I absolutely agree. Look at Oklo, look at there's a lot of different names that are in that space that look tremendous. But if you're talking about traditional XLE, no.
I mean, these people who bought down in the $6 and $7 range, they are really loving their holding right now in Oklo. For sure. Nick, is this?
Oklo, SR. What's the other one? The smaller one is I think NNE and LTBR. Even General Electric, GE is looking phenomenal. VRT, VST, Sedge, JEV, LEU. God, what was the other one?
There's some major moves. I mean, I'm not saying they can't. Happen, but I'm looking at VST. I mean, that's a big time move in a year and a half.
What I was kind of thinking is, I think these things are going to continue to run until they start to split.
You know what the best part of all this stuff is?
In the back of my mind.
Do you know what the best part about all this stuff is, right? People are still referring
None of it's real
as memes, right? And okay, these stocks were memes in 2021, 2020 when they were SPACs, when there was infinite money cheat code going on. But now the names have separated themselves from the group of the basket of bullshit, right? You'll see a lot of names that haven't come back. Look at what's that name that was selling scrubs that was like marketed at like some ridiculous figs, is it?
I couldn't tell you.
Yeah, figs, right? Like look at figs, look at Jessica Alba's company, Honest, right? Look at all the ones that were part of the meme stock revolution that can't and have not, will not ever get back to what COVID was, and those names are not doing that well, right? They might bounce from like $1 to $2 and you made 50%, but they're down 99%, right? So what I love about this conversation, and I continue to see it, is everyone refers to it. Nick, we touched on this a couple of weeks ago, which is the degenerate economy, which is it's a gambling mindset, but these are legitimate bases that these stocks have built, and if they're breaking out, there is more power to this conversation that if we get a pullback, it's gonna be healthy, right? So if you're trading, that's a different conversation. But if you're investing, trim and trail, right? Get to pivots, and once it breaks out of the base, which you're seeing a lot more of. Look at Cheesecake fucking Factory, right? Like, holy shit! Like this is where fat Americans live. Sorry, just kidding. But it's I'll get off my tirade. But
You're going to get canceled.
Yeah. That's why I said sorry. I'm sorry. I'm myself a fat American, so I align with you. But look at Cheesecake Factory, right? In terms of cake. It's fairly simple, right? Like this is building pieces. This stuff is breaking out. This is not meme stock revolution. This is growth on a secular level, right? In my opinion, that is. I could be wholeheartedly wrong. Yes, is there some fraud from the markets? Absolutely. There's no doubt in my mind that there's froth in the markets. Look at what Microsoft has done in the last 3 months, like straight up nosebleed candle. If it tests 460, 470, it's going to be healthy for earnings, not bad. Coin straight up and going into earnings, it's retesting that level. These are good, healthy conversations. Coin also did jack shit for a year and a half while Bitcoin doubled. So this is the part that I love about the conversations amongst FinTwit is like it's a meme stock revolution, so people are only renters, not buyers, right?
Hey, can we go back real quick to the gold trade? I mean, you guys can, whoever's watching this can go back to the archives. What must have been 2023 when we mentioned the breakout here, right? I don't remember. It was so long ago. Go check the YouTube. But to say all that, right? All the big gold bulls got their big breakout after all these years, and you're up 62%. And that's not anything to sneeze at. That's nothing to be ashamed. But we've had some stocks over the last 3 months that have done better than 62%, right? And I think my point on the commodities or the material, minerals or whatever trade is, why do you want to wait? That is why I've always been in growth, right? Is you're going to get high beta, you're going to get bigger ebbs and flows, but at the same time, I don't feel like you're stuck in these multi-year bases having to play out then to only get 60%. That doesn't seem like a good use of my time. But you guys tell me if I'm wrong about that.
No, or your capital. Like if you were to throw in the GLD, it's like, fuck, it ties so much capital. I like paying attention to it. I like speaking to it, but at the same time, like I'd rather trade a Momo fucking shit code that's gonna rip the same amount in a week as opposed to like I think some of you guys, or maybe some of the people in the chat, used to probably follow Trader Florida, but he always used to say like he wants to be in the stocks that are moving the fastest, the furthest in the shortest amount of time. And it's kind of like, whether it's gold or any of these names, it's like if the trade's not trending on your time frame, then you're in dead money. I understand the investor mindset, like you want to be in something that, in the long term. But again, the name of the game is compounding your dollars. So I don't know. I traded in and out of gold. I'm not gonna. It is what it is.
Yeah.
How many?
I just think it's painful. Like you've got
Or GLD, I should say.
Better part of 6 years where you barely went anywhere, right? You've got this better part of, what is that? 4 years that you barely went anywhere. Sure, if you were in here to get that, great. And if you stayed in to get that, great. Like that's a long-term investor, and I hope you've got other money working elsewhere. But at the same time, Nick, I think you're exactly right. You're missing opportunities potentially to have exponential gains as opposed to a 60% from the breakout point. I mean, let's just look at Wayfair, right? This is one of GP's darlings, right? He loves some Wayfair. Look, if you just bought the month after Liberation Day, right, you're already up 125% in 3 months, right? You didn't buy the bottom. You waited for it to rebound, and you're already up 125%. It doesn't always work.
I don't think most people are. I mean, most people aren't going to be full port in one name, though, either. So even if they do have a gold position on, it's
You honestly didn't have to be, right? If you take Wayfair out of the equation and replace it with NVIDIA.
sure.
Right? Take out NVIDIA, replace it with AMD. Take out AMD, replace it with SMCI, right? Take out I don't know, Coin. Take out SMCI, replace it with Coin. The list goes on, right? In terms of in terms of how growth could impact. We're in a bull market, and if you think we're gonna die and the market's gonna come in and we're gonna shift over to safety assets, maybe that's why you're playing XLE, but it's a capital requirement.
If you put $1 in gold or $1 into NVIDIA in 2012, you're up $71 in gold. You're up $5,000 or $57,000 in NVIDIA.
Yeah, there you go.
Yeah.
I mean,
2012 was not a bull market yet, by the way. Just throwing that out there. There's too many people who like to quote the bull market started in 2009. If you
I'll be even more lenient. I'll go back to the lowest part in 2016 for gold, and we will flash that right back up there.
There's no matching NVIDIA growth. Like, right? Ultimately, you can't match it. The crazy part is, I saw a stat yesterday that said NVIDIA has a larger market cap than Amazon, Netflix, Tesla combined. And then I go into my little rabbit hole, and NVIDIA did 130 or 140 billion dollars in revenue last year. The other three companies did 760 billion. So the
only way we're doing worse in gold is if you put your money in IWM in what is that? January of 2016. It's the only way you're doing worse.
How about Oxy?
You're probably doing
that. Take a look at power, though. PWR.
Get away in the S&P 500, right? Like if you just sock it away in the S&P 500, you're still 20% better.
Yep.
Right? Anyway, we're belaboring a point I think we all agree on. Hey.
Yeah, for sure.
I do want to talk about something that I saw. I posted this yesterday. I'm going to pull it up on the screen. Allow me to take control of the sharing feature. There we go. And presentation screen. That. What do you guys think about that?
Are we double topping?
I don't know. Are we?
I don't know. I think we're setting up to blast the fuck off. I don't. Even if we do see somewhat of a correction, like Qs roll over here, and we do retest the breakout, I think we're setting up for a major leg higher.
Yeah, I will continue to say it. The risk is to the upside, not the downside.
So overvalued is going to continue to be overvalued.
I don't know how they ran these metrics, so
sure.
I can give fucks. What this thing says.
Enterprise value relative to economic profit.
Yeah, and swap out two other things that are randomly proving their point, and we'll get there, right? So the Buffett indicator is flashing, everything is flashing. I get it. But until things break, stop paying attention to headlines. That's literally as easy as I can say it, right? In terms of markets, things have to break for your thesis to be right. Your thesis can be right for an entire year before the things break. And just because you come back in February of 2026 and say, hey, look, I told you it was overvalued and the market dropped 50%. But shit, man, if we're at 10,000 and we drop back to 5,000 by then, are you still right? No. So pay attention to the price. Ben, none of us care about headlines in terms of our trading and our stuff, right? You listen to what people say and what the markets are doing.
Well, I bring this up because last week I referenced that I'm seeing a lot more headlines. I'm seeing a lot more bears get hungrier and hungrier and louder and louder. I don't know if you guys have picked up on that since I mentioned it last week, but I'm seeing it. And when you start seeing it, I posted several more headlines from the Wall Street Journal and Barron's as well from yesterday morning. I think this just continues a wall of worry. Similar thinking. You guys have both referenced this V out of Liberation Day, basically, to compare it to COVID 2020, right? And if that's the case, if your thesis is correct, what part, let me go back to the weekly here on the Qs. What part of this V are we in? How early are we from here to here? Because this is a much bigger V than the COVID one was. I think COVID scared the shit out of everybody because, right, it was a health issue and people were dying. This was administration and people selling off of fear, not that people were dying, right? So to me, this is much greater.
Yeah.
So if I hate analogs, but if I'm playing your guys' game that this is similar, I don't think we're anywhere close to what we were in the end of 2021. Do you?
No, like we just
to
said,
the end of 2021? No way.
Well,
I think there's a chance that
right. Everything was great at the end of 2021. Everybody was fat and happy. You had sunk money during COVID in, and you had the better part of a year and a half to enjoy, right? In getting fat and happy, as I like to say. So you enjoyed that section right there. Oh, I don't have the chart up. That's a problem. So you had plenty of time to enjoy the fat and happy of COVID back here. Now you can see me. You had plenty of time to enjoy that, right? All the way up to the end of 2021. Now, if I look at this versus this, and if you guys are telling me it's the same, there would be a much, much larger runway higher than there is. This is the top that's going to be a perilous fall of some kind. Yes, right?
The way I'm taking it is a day at a time. I have my general kind of roadmap that I think that we're following. I think the pain trade is up. If we start to see us kind of move into more of a active mode, then so be it. But it's going to really kind of determine how hard we run and the levels we hold as we do push higher. So like, I'm just going to continue to stretch those fibs out and continue to like look and see where we hold. The more that we grind and or stair step higher, the more sustainable I think that the run is going to be. If we do just at some point start to go legit parabolic, well, then I think we all know how that's going to end. How long that lasts, I mean, I don't know, and what it looks like, I don't know either. But just looking at the chart, like the cues, like as of right now, I wouldn't change my tune or my bullish thesis unless we took out 500 on the cues.
I mean, I got the monthly up here, the cues. If you look at this in comparison to this, 2020 was just a blip in the screen, right? And the fear was palatable. Like everywhere you went, you could taste and smell the fear.
I mean, I feel like you could this time too. Like all of the Trump shit, like, dude, the dude was almost like shot a couple times. Everything that they're running on the news, it's like end of the freaking world. He's gonna cause all these wars. Tariffs are gonna like do this, do that. I mean, it is day in, day out, dumb ass shit that they're just literally throwing at a screen. Whether it all plays out or not, I don't know. It's a bigger words than I can comprehend. But like, I think that the fear mongering was more or less the same at a level of it, if not more, during this election than COVID. It was like, oh my God, democracy this and free speech that. Like, dude, I don't know. I think it was the same, if not more, fear mongering in this instance than even COVID.
What about that headline?
And then you like, a new study claims, yeah, see, there we go. We got another thing. Maybe finally aliens coming will actually get humanity to, come together and be like, hey, like we can all get the fuck along and, deal with some aliens instead of,
or
I don't know, picking at each other.
Or it's global thermonuclear war, right?
Or it's a
so that XLE
scheme, right? And we get more aliens to buy Teslas. Who the fuck knows, right? It's like none of this matters. None of this matters. The only thing that has mattered is Fibonacci retracements, and it's pinned to my Twitter profile. You guys are welcome to check it out. We are going to 77.41, whether you like it or not, and you're going to be screaming the whole way there. Whether Tesla participates will be up to, I'm not sure what his name is, but Double Up. He's just a Tesla hater. But the S&P is going higher. Go take a look at that chart. The retracement was a 50% retracement back to test the 2022 highs. It is a liquidity conversation. We are going higher. From 670, we will probably 660, 670 on the SPYs. We'll come back and retest it, and then the aliens will win for about 500 points. And
what fucking good does the money do if the aliens fucking win?
I know.
Points, and then the aliens will be conquered by Trump, of course. Just narrative. Dude, I can make up a narrative. Whatever you want me to do, I can make it up for you to represent the price action. The price action is what we have to pay attention to. If things are not participating, pay the hell out of it. If you're building a position, tune out the noise. Boner pills for everyone.
Speaking of building a position, I'm so excited to tell everyone this. You guys know I love cybersecurity, right? And there's a huge deal in the cybersecurity space.
Yeah.
Palo Alto Networks is buying CyberArk. Womp, womp, womp. They're not buying Sentinel-1. But it's okay, because just like I mastered the AMD Xilinx trade, here is your rubric cube to figuring out how to play this motherfucker. Are you ready? Are you ready, Nick?
Yeah. Yeah, lay it on me.
Palo Alto, it's a stock cash deal, all right? So for every share of CyberArk, you get 2.2 shares of Palo Alto Network and $45 cash. Right now, that's roughly trading at a 3% premium if you're buying Palo Alto stock versus CyberArk. So I love buying deals. I love getting things that cost less money, that are valued much higher. So the play is to buy CyberArk. I already on Palo Alto. Yeah. So now the play is to buy CyberArk to keep that arbitrage between the two. Now, of course, the downfalls are if the deal doesn't go through, CyberArk's probably going to tank a little bit on that news. But Palo Alto will go higher on that news if that happens. But regardless, either way, the regulators have all been fired or they're asleep at the wheel. There's no reason why this merger won't happen. I say CyberArk's a buy. I've already started my position. I got in this morning. I will only be adding CyberArk shares from here on. I've already got my core Palo Alto position in place, and that's the trade for you. What do you think? You like it? You hate it?
It's an arbitrage trade, right?
No, I'm into it.
Yeah,
arbitrage trade with a potential bigger upside.
Exactly.
Yeah, I like it.
3%. So as long as Palo Alto and CyberArk keep going higher, and it stays with a 3% gap, you're getting cheaper shares by buying CyberArk when the merger happens.
Sure.
I like it. I like it a lot.
I like it a lot.
When is that supposed to finalize, or when are they supposed to?
Who knows? Who knows? You know how these deals go. It can be anywhere from 4 months to a year. We don't know.
So I have another question for you guys. I started a new position today.
Oh, do tell.
Oh,
and and after I started, because I only look at technicals when I'm entering these things, I realize earnings is tomorrow morning. And I am up. What is it? It's at right now. It is up about $1 from where I bought it this morning. So it'd be a green trade and just get out. But it's earnings tomorrow. What do you guys think of the chart? And the ticker is CVS.
CVS.
I hate it already.
Dang. No, I love it.
You do have the potential failed Batman move here, GP. So you got that going for you.
It's the undercut of the COVID lows, but the weekly is what I'm not even looking at the monthly. I actually took it based on the weekly.
The double bottom.
It's the double bottom for sure, and obviously we can go back to 55 on CVS and still be really, really bullish, in my opinion. But the one thing I noticed was on the weekly, it went from rejecting the 50 SMA to holding it, which is now also rising. Right, so I entered the trade. When I entered it, I was like, "Oh, I got risk about $1.20 down." And it goes to about 77, so about 16 up. So I'm like, that's a great risk to reward for me. I know it's CVS ultimately, but if it takes, I don't know, if it takes a few months or whatever it is, I'm okay with it because you'll also get like a piece of that 4.3% dividend. But earnings always, it's a binary event. Anything can happen, and their receipts are still 6 feet long. So I'm thinking they haven't really changed their business plan, but the chart still looks good. Go ahead, give me your assessment real quick.
I'd say it's coming off an oversold reading on the daily. Pretty easy risk reward because you could risk the gap fill if you really wanted to. You got the double bottom on the weekly. The ATR's been falling off a cliff on the weekly. On the monthly, you got off that kind of was that late last year, January. You got the monthly MACD cross there. So now, I mean, you could either look at it as a double bottom on the weekly or just putting in a higher low. And I think it's a pretty range, like a pretty looking range too. like symmetrically, just you can draw two pretty identifiable parallel lines right across the top and the bottom. So, yeah, I like it.
The problem is with the risk to reward is goes out the door if it gaps down $10, right?
Hey, GP.
Yeah, for sure.
Is this just a trade, or are you trying to stay long this?
I was trying to be longer term because it's so for me the first thing is the rising. It went from a declining 50 SMA to a now rising 50 SMA. So I'm up $1 at this point. So I'm like, should I just sell it and wait for potential entry afterwards? I'm actually in a dilemma. I got about an hour to figure it out before earnings comes out tomorrow morning. I think I'd like to be, based on where it is in the chart, I like that it could potentially be a bigger move back to 104 plus, which gives you about 80-90%, and you're holding along with a dividend to boot.
I mean, if it was me, I really was looking to stay along, I would just reduce the size if you're going to hold into EPS, so that if it does smoke you, it's not really that bad. If it doesn't, and you leg in above the, let's say the highs, or above that, either above that trend line or above the highs of the kind of double bottom, you leg back in, it's still able to keep your costs down. Okay. If that's the risk you're willing to take. But I don't know. That's how I would play it, and kind of generally actually how I do play EPS announcements if I don't have a good amount of cushion. If I have like an asphalt cushion, I honestly, and it certainly has kind of bit me, but I generally try to hold as much as I can through the EPS. If price is trending, I usually in the back of my mind, I assume that any gap down is going to get bought up. I don't know. That's just kind of how I think about them.
Thanks, Nick.
I don't like to be the wet blanket, but I'm the wet blanket on this one.
Yeah.
So here you go, GP. People are getting drugs from everywhere, including Amazon. So being a drugstore is meh. If we're talking about retail, all I know about CVS is my wife loves couponing, and this is basically the alternative to Dollar General. So she will clip all
CVS?
Yes, CVS.
Oh.
So she will clip all these coupons.
I just thought it was like a drugstore.
And walk out of the store with, I don't know, rolls of paper towel, toilet papers, dish soap, laundry detergent, a whole cart full of stuff for like $15. And that's the same thing she does at Dollar General on Saturday. So I don't know if a race to the bottom is a business model that I like. Technically, I like what you're saying. I think you can make a case that this goes higher, but fundamentally, it's not a stock that I would want to be involved with, just because I don't see the business plan other than trying to coupon people.
Yeah, fair enough. I'm probably going to exit because it doesn't make any sense for me to hold into earnings. I agree with they are doing a lot of cost cutting and stuff like that, so it can just naturally, organically boost the share price. But for a company that has yet to prove itself in any meaningful way, going into earnings doesn't seem like a solid bet, even though the risk to reward is pretty good. I'll probably regret it tomorrow, but it probably makes sense not to have that risk on, because that's a 20% move down. 55 should hold, right?
Yep.
So
speaking of earnings, we have several coming up today, including Meta and Microsoft, two mega cap darlings. Are either of these
I really don't like the chart matter.
You would like to buy in front of the earnings report?
No, I took my trade in Meta. It kind of on it, I hate to say it. I posted a chart last night. It on the daily, it kind of looks like a short head and shoulders. So I was kind of thinking if I took the trade and just thinking that it's gonna continue lower and probably retest that 200-day, which is kind of in alignment with with that gap. Where is it? Why isn't my? Hold on. I think you get a continuation trade down to like somewhere in like the mid 600s. I was like, if I really wanted meta, which I'm bullish on meta longer term. But I think I can get the shares back down there. If
Meta
and
Microsoft don't do it for you, Hood is also reporting this evening, and I know that you love some Robinhood.
Yeah, I'm in Hood. I don't plan on anything. In fact, I mean, even if it did sell off, I'd probably just add to the position.
You like those inside weeks there, Nick? You like that? You like the little pennant?
Yeah. I don't know how you can't be bullish on Hood. I think that I don't like, not to call it like, Howard always calls it like the regen economy, but I liken Hood to kind of like Jim Cramer back in like early 2000s. Like the way that I like think about it is like Hood is allowing such easy access to investing to so many people. Like they've gamified it, appified it. Dude, you can automate everything on there, everything from your Roth to just whether it's a cash or margin account. I don't know. Like I think Hood is kind of not. I don't want to say the future of brokerage houses, but I think it's a retail staple. Kind of same thing with Coin too. I think Coin is a little bit different than Hood. But if you're talking about your average, your neighbor out there that's wanting to buy, like, I don't know, they want some exposure to crypto, or they want to start kind of investing, like Hood is the easy way to go.
Yeah.
They don't care about, all these like altcoins. I don't think. So
GP, would you be buying Microsoft or Meta or Hood in front of earnings, or would you be selling both of them?
So I would be selling Microsoft and Hood and buying Meta if you were forcing me to.
In front of earnings.
Yeah, in front of earnings.
That's the question. Okay.
So do me a favor, pull up the Microsoft chart.
I would love to do that.
I mean, I'm hoping I can get Microsoft around like 480, 490 if.
Yeah, it's 470, right? So 470 is the prior all-time high. This is in nosebleed territory. Ultimately, a retest of that 469, 470 area would be probably a gift, even if it undercuts a little bit. I think that gets you probably, where's the weekly 9?
It's up here at 493.
So weekly 20 maybe? I'm not sure on the weekly.
That's the 20. Yep, that's an 8% fall from here.
Yeah, so I would say, can Microsoft keep going? Absolutely. It's Microsoft, and it's lagging behind NVIDIA's market cap, so it can continue to go. Would I prefer to see Microsoft have weakness, retest 470, and then go from there? Absolutely. Do I want it to just be an overnight aftermarket kind of test? No, I want it to actually be real-time hours test, and have some fear or whatever that's going into it. Hood, same thing. It needs rest. It is
for sure.
Right. It's gone from 28 in April all the way to 100 and something. So a retest of the original all-time high, which was 85 or something like that, would be a healthy thing for upside movement in the future, right? Like that's my, like, from a chart perspective, that's the level I would love to see retest. Hood is knocking it out of the park. There are a lot of criterias that we've talked about over our years doing this podcast. One of the ones that always stands out to me is disruptor and founder led. And those two combinations, we actually talked about Hood. You never sleep on those names, because people who change industries and lead companies tend to figure out over time. Maybe they misstep here and there. There are so many examples. Reed Hastings is one of them, right? He misstepped that Flickster nonsense. He tried to sell the Blockbuster. He had a lot of missteps in the process, and now he's the king of streaming, right? And look, I like Hood long term. There is no doubt in my mind. It just needs a healthy consolidate. Maybe it doesn't retest. Maybe it just consolidates. It needs something, because it's running out of, I would say, buyers. Same way as same as Microsoft, right? And so you'll see, as an example of how earnings are looking right now, if you've run up into earnings, look at Tesla. Tesla ran up into earnings, you get crushed on earnings, right? Down 9-10%. Look at Wing. Wing ran down into earnings like hardcore and went absolutely apeshit today. So every earnings has its own character. We've talked about stocks having personalities, right? Every earnings period has its own character. So you're like, what I always try to do is figure out what's going on with these characters during earnings and see how they're reacting. And so names like Wing gives you an example of they pulled it in on not a lot of volume, and earnings crushed it, and it's up 26%. Coin is having a similar moment into earnings from 441 straight to 370 in 7 red trading days before earnings. I think it's Thursday. So you can see these things, and the things that have run up are the ones that are coming down. So vice versa.
What did you get an wait for, Nick?
Oh, yeah, sorry. Coin reports tomorrow. Did you say?
Yeah,
Coin
reports tomorrow. Hood reports today.
Cool.
And you can watch and listen to all those conference calls, all those earnings calls right here on Stocktwits. So if you're curious of what all the corporate financial gibberish is, just tune in. It's helpful. A lot of times the headlines are even written before the stock price comes out, but you might pick a nugget out of what they say. I like to listen, especially to the stocks I'm holding. And speaking of that, I've got 4 that are reporting tomorrow, which is going to be a great time. Apple, Amazon, Coin, 5, Roblox, and Net. I forgot I put on an Apple trade. So that should be a lot of fun. But coming back real quickly to those other guys in the mega cap space, I was just doing a little quick back of the napkin math on where these were in comparison to their 2022 bottoms. So I call it the F MAGA trade. So you got Facebook, Microsoft, Apple, Google, and Amazon. All of those names, except for one, are up over 100% from their 2022 bottoms. That one name that's not quite 100%, it's about 57%. Apple, Tim Apple. It is not running into earnings. Now, could I get absolutely slaughtered in this trade tomorrow? Sure. But Apple is not a stock that fails you too often for too long. And I would say, just based on that it's time for Apple to start leading some of these mega cap names. That's my thesis, and I'm going to stick to it. Another name that we had in the chat you want us to look at was Google.
Google,
in comparison, has been a bit more of a laggard than others, but now after earnings, it's running. And, we talked about this a little bit last week. Guys, what do you think? You both were sort of sour on Google about a month or so ago. Has your tunes changed?
Yeah, I mean, I think 250, 260 is the next measured move, kind of where it's heading. I think if it gets there, I'd probably just end up rounding it up to the round number at 300. Like, I wouldn't be surprised to get flutter between 250 and 300.
Hey,
Ben, I
Shu,
think,
chat wants
Ben, I
to-
think you know where I've stood on mega caps for quite some time now. There's opportunity cost in owning the mega caps. I think as we go into the later parts of this bull cycle, will they continue to do their 15, 20% or whatever? Sure. So I'm not like, I cleared out Google, I cleared out Amazon out of some of my accounts. Still have some old positions that stay, but cleared out a lot of the stuff that I went long, like Google and Amazon, on an account that I took over for my dad back in 2021 or 2022. Left them in cash the whole time, deployed it into Amazon and Tesla and Google. So have cleared out of Google and Amazon because I like, as great companies as they are, I just don't see where they can get to over the long term. I think and Amazon and Google are in the same kind of, I'm in so many buckets of things that I will never get the valuation that I deserve, right? Like, for example, Google owns YouTube and YouTube crushes Netflix on like every level, but Netflix gets a $500 billion valuation and Google doesn't even get, look, we don't even know what they value because it's part of this conglomerate.
Yeah, and
Overall, it's in the gap and it's going to break higher. Sorry, go ahead.
No, we brought this up before with Amazon, right? Like sometimes the parts separated are more valuable than the conglomerate together.
And you see it with GE, right? GE is an example that we talked about a month
Break
ago,
up
right?
to make up.
Yeah.
Shu in the chat brought up the Dixie. He wanted to look at the dollar index, and I love looking at the dollar index. The dollar has been just slowly petering out for the better part of 2025. But we have a pretty big, sizable pop over the last 3 days. And on the daily, we're ready to experience a golden cross here. If the dollar is going to be stronger, that inherently is negative for equities. What is your guys' take on the dollar, or do you even care?
It's something worth paying attention to. And yeah, if we start to see that push, there is that negative correlation. So for those that do think we're kind of in correction up sideways territory, I mean, that could be the catalyst for that. I think, I don't know whatever. I mean, we're obviously selling off now. You know, cue all the sayings about first move, false move, yada, yada, yada. I think tomorrow and Friday will give us a lot better indication on the direction that we're heading. With that being said, the McClellan right now is pushing at a negative 100. So, kind of on kind of where these things shake out. But if we get a negative 200 reading, I'll be looking to deploy quite a bit of cash on weakness.
What time frame
kind of
is
see
that
though?
McClellan ticking there, Nick? The daily?
It's a daily, and it's tied to the NYSE, not the Qs.
Do me a favor,
just
and as soon as that hits minus 200, just tag me in a twat or text me. Let me know.
Yeah, we'll do.
Thank you.
I mean, if we saw a bloody day tomorrow and like a super weak open on Friday, I bet you we could see it. If we saw like just weakness into the end of the week and a nasty gap down Monday, we definitely see it. I think depending on how nasty the sell-off and the kind of destruction that the destruction did, I think it would kind of, yeah, we'll just have to kind of play it by ear. But yeah, I'll tweet you or text you.
30 seconds, last word. Nick, what do you got?
Follow your plan, risk management. If you get stopped out, you get stopped out. You can always buy it back or short it.
GP?
Founder-led disruptors tend to outperform most companies over the long run. My bet has been HIMS, and HIMS will continue their dominance. If you
Oh yeah, we didn't even talk about hymns today.
if you listen to Novo Nordisk conference call, they spent the entire call blaming hymns for their miss, which
I know.
only validates the rate. So,
Yeah.
founder-led disruptors over time will win, unless you're Trevor Milton.
My last thing is we're in the thick of earnings season. Don't get lost in the sauce. Set your price points. If there's a big pullback on something that's high conviction, my opinion, that's usually a buy for me. Unless something breaks in the conference call that is just completely altering of the business model or whatever the stock is. So I always like to look at earnings as a potential buy opportunity after the fact. So just be patient, set your price targets before earnings, but enjoy the ride. That's it. We'll see you right back here next week, except for Nick. He's on vacation. Bye, Nick. We'll see you next week, Wednesday, 2 p.m., right here on Stocktwits. Thanks for watching the Community Rip Live.